Hello, welcome to excelexperts.com. This is the Excel for Finance tips section. Today we're trying to answer the question, what is IRR, or the IRR function in Excel, which is internal rate of return. And I thought a useful way to explain this would be to come up with a real life example of starting a business. So when you start a business, you have cash outflow, so money is going out every year. Let's say you're running a website and you spend £5,000 every year, and you plan to do that for 10 years. So if you're running your own business and you're the only employee, you've got the opportunity cost of your time, which might be this value, and that goes on for, let's say, 10 years. Now, let's assume that at some point you're hoping to get some money, and these are your cash flow projections. So slow at first, then ramping up, and then a steady cash flow stream for 10 years. If you add all of these amounts of money at various points in time together, you'll get the total cash flow. So negative, negative, and then positive. This, as a series of cash flows, has a rate of return associated with it. So if I were to have a simple single investment and invest it at a flat rate every single year, what would that flat rate be over the 10-year period, in order that the value I have at the end is exactly the same? Well, that is the IRR. So for the IRR function, we enter the range here, F9 to F18, and we have a guess at the IRR, which is 1. So we could change our assumptions. So let's say minus 50, and we copy that down. Well, if the opportunity cost of our time is 50,000 every year, well, guess what? Our investment return doesn't look so good now. So the higher the cost, the lower the return. Well, that makes sense, doesn't it? The lower the cost, let's say we've managed to delete all of our fixed costs, the higher the return. So now the return is 10.85%. So this is a way of looking at IRR in terms of an investment appraisal decision. Now, if we go back to our original example, 20% a year, that's a very good return. It's much better than I can get in the bank right now. I can only get 0.5% or something stupid like that. So if I were to think of this as a business opportunity, this is not a bad thing to do. You've been listening to excelexperts.com on IRR.